Welcome back, and joining us on the show now is Nirmal Bang's Kunal Shah to talk about commodities, which actually have performed quite well in 2025. Kunal, hi, thank you so much for joining us. I want to start with copper because all of last year we saw gains of 6.5%, but 10 days of 2025 and we are sitting on a hefty gain of 8%. At 3-month highs, US absolutely is buying a lot. There's a big premium that we seem to be building between COMEX and LME at this point in time. How long can it last, and how do you see the prices?
Okay, so the fundamental of copper, so if you look at the demand and supply side, there is no major vacuum, but the LME inventories were at record low. Second thing, the expectation of China coming up with stimulus is very strong. So as of now, we have not seen any announcement coming from the Trump that what's going to take place when it comes to US-China tariff. But let us think that on 20th, we may get some clarity. So there can be a bouts of profit taking in this commodity, but the expectation of China coming up with stimulus is going to be very real. If you look at China's 10-year bond yield, they are making new low every day, and US 10-year bond yields are making new high every day. So there's a big divergence between China and US bond yields. This is a clear case of there is a deflation going on right now in China. That is what the bond market is indicating. But the copper prices are moving up. So the expectation of stimulus is building up in the prices of copper, and that is driving other industrial commodities and copper. So we believe that China will come up with stimulus at some point. It's just a wait and watch game for them. What Trump is doing, what are the Trump's policy when it comes to China. So still, I remain very optimistic about the outlook of metals and copper. And I believe that 810, 815 again would be a good buying range. And the likelihood of copper going to 850, 860 next 1 or 2 months is very high, then it going down sharply.
Another thing also is, Kunal, that while copper has started the year very strong, do you see that spilling over, rubbing off to aluminum and zinc as metals as well? Because we've seen slightly better fundamentals onto this one too.
So aluminum, earlier we were seeing, because of the higher alumina prices, a lot of smelters were closing their operations. So alumina prices have come down from 5,500 per ton yuan per ton to right now 4,100 yuan per ton. So we believe that again the supply side can respond going forward. But there is a winter is coming, so because of the smog and pollution, China may come up with more production cuts. So the supply side in next 2-3 months not going to be great. So I believe aluminum has a better prospects as compared to zinc. Zinc, the fundamental continues to remain a little grim because we've seen Korean zinc coming up with the overall outlook on zinc that the demand side doesn't look great because of the steel production in China expected to go down. So zinc not great, aluminum and copper likely to do better in base metal complex.
Fair that. The other metal that I want to talk about to you is silver, because here as well, while of course the previous year was great, it was the best since 2020, but the kind of run-up that we've seen in January until now has been quite strong as well. So more than 5% of gains right now. And there have been those reports that US has imported 15 million ounces of silver in last 5 weeks itself. Would you say that this is ahead of perhaps a tariff concern? Because silver is, US is the largest importer of silver, imports a lot from Mexico and Canada. Do you see that in works?
Yes, because of what is going on with the clean technology, solar is continue to dominate the clean energy complex for next couple of years, at least next 10 years. So US definitely would like to get a hold on it. Everyone knows the photovoltaic cells, that is the major driver of the silver demand at this point of time. We have seen a double-digit growth in that segment only. The solar photovoltaic demand is causing a major run from the demand side. Supply side is going to be better as compared to the previous years. We are seeing production increasing from various countries like India or even Mexico. The production is likely to increase. So supply side is finally responding, but not to the extent the demand side is getting strong. Another thing, all eyes will be on what is happening with the US 10-year bond yields. So we believe that going forward, Fed at some point will take a call and there will be a pause in their bond selling program. So what Fed has been doing to reduce its balance sheet from 9 to 6.8 Every month they are selling bonds worth $100 billion, $75 billion. That is likely to stop, and that can lead to the reversal. So entire world is now thinking when the US bond yield will start to go down, when the dollar index will again weaken, and that's going to be a breather for all asset class. And I think in next 1 month or so, we may see, because if the yields keep shooting up, if the interest rates are not going down sharply, it becomes very difficult for US to service its own debt. So I believe that there can be this kind of announcement coming. The first thing which Trump said in his speech, that interest rates are too high. So in order to cut down the interest rates, or in order to bring the US dollar down, the bond selling program of US should end at some point. So this will be the trigger for bullion market. The outlook for metals and bullion continues to be very bullish, for silver in particular also. We are expecting silver to test $36 to $38 in the year 2025. And on India, that should translate to 1,15,000, 1,16,000. So the view remains very upbeat.
Kunal, a word on gold as well, because you spoke about bullion, and yes, depending on what the US president, as he takes office on 20th of January, says, there's going to be a lot of uncertainty, but as you said, it seems like a bullish year. So for gold, would you divide it into two halves, then the first quarter, the second quarter, perhaps the first half of the year or the second half of the year?
So the entire gold trade is now shifting to East. The East is buying gold and the West is buying Bitcoin. So it's a West versus East, and it's a complete push and pull. So we've seen from last 3 years, none of the Western central banks have bought gold. And you see Trump coming up with statement like they want to create a Bitcoin reserves, and that can be used to reduce their debt if the prices gets inflated. But the entire shift of power is taking place from West to East, and hence what East does will be very important for the bullion market. So we've seen the volume growth in East picking up, and with sanctions on Russia being put by US, none of the Eastern central banks are going to buy US bonds, at least for next couple of years. Nobody is going to buy as of now. So what is their insurance if dollar crashes? What is their insurance if Trump comes up with an aggressive tariff and there is a sharp slowdown? What is their insurance if currency depreciates sharply? It's gold. So I believe for next couple of years, the buying for central bank will continue, and that is the key driver of gold right now. Second, all the central banks are on an easing path right now. And like I said, at some point, US and Europe will stop selling their bonds into the market, and this all will come up with a very bullish case for gold in the year 2025. So I'm expecting gold to test conservatively 29 to 29.50 or perhaps $3,000. That is my conservative target. 10 to 15% return is something gold will keep giving you for next 2 to 3 years. And I'm saying this from last 2 years, and I retried that for the year 2025 also.
All right. Kunal, a final thing, and while of course all of us will be watching out for 20th of January on what US does, but 10 days later after that is going to be the Indian budget as well. Is there something or a top wish that you would want to make to Finance Ministry when it comes to commodities as a business within India?
Yeah, so India, the size of Indian economy is right now $3.7, $3.8 trillion, and the pace at which we are growing. A lot of these commodities the demand growth is growing at a double-digit growth rate. So it's a time we cannot ignore the commodity market. We have to rationalize the tax structure in the commodity market in order to get the more and more hedging. Right now, all of these hedging is going to LME or the COMEXs. We want Indian corporates, Indian SMEs, Indian MME, Indian large caps to hedge on India. And that can be a major driver for the Indian commodity market going forward. So we've been in this industry from 20 years. And believe me, Indian commodity markets, they have tremendous growth potentials from now. We've seen the way stock markets have done well in last 10, 15 years. I think it's a time for commodity market, and government should they are paying focus, but they should pay more focus to develop this market, come up with such kind of constructive policies, and help this market to grow.
All right, Kunal, thank you so much for sparing time and joining us on the show today. Manisha, thank you for joining in as well.